Good morning, traders. Today is Monday, April 25th. My name is Charles, and this is the Pirate Traders live stream. Thank you so much for joining me. If you don't mind, please push that thumbs up button. The likes really do help when they come in first thing in the morning. It's good to see everyone. Hope you had a good weekend. All right, well, what are we looking at here in the market? Obviously, last week there was a bloodbath with those 2 days of massive selling that the market took on. And what I'm looking at is the question that we're asking ourselves this morning is, was that enough of a pullback that the market is ready for a bounce, right? Ready to push higher, looking for resistance or to break through and get continuation to the upside? Or is the selling still happening? Do we still have that negative momentum in the market? Are we still trending down on the daily? Okay, my guess is, just because of how we're going to open this morning, that we're probably going to get some more selling here today. But I wanted to start with the daily just to point out that we are now pushing back into a previous balancing area, and that increases the odds. We can bounce off of it, so we could come down, hit it, and then bounce today. But what is more likely if we don't get that move is that we are heading down towards the opposite end of balance. So the 4180 area could be in play here if the market can't get back up inside of yesterday's range at some point here today. Okay, so that's pretty bearish to see in terms of momentum. And so I'm keeping an eye on it. So what are we looking at first thing at the open this morning? Well, we have a gap down, right? So on Friday, we had a spike down at the end of the day. We closed inside the spike. So that tells us that spike rules are in play. Spike rules basically say if you open inside the spike, that is neutral to bearish. If you open above it, that is the least bearish. But if you open below it, that is the most bearish scenario you can have with spike rules. So right out the gate this morning, we got momentum to the downside with the trend to the downside from the last couple of days. We have a spike down, which is more momentum to the downside, and then we have a gap lower. So the first order of business for the market this morning will be trying to fill that gap, which means trying to get back up to 42.62, which was yesterday's low. Okay, if the market is able to fill that gap and it finds resistance at Friday's low, we would look for continuation to the downside, as that would still be what we call a gap and go, which is a very, very bearish thing to see. Okay, if we're able to get back up into yesterday's range, then we can look for a push higher to try to test this node up here at 42.90. Or I guess 93, and see if we get some resistance there. Okay, so I'm looking for resistance at 62. If we don't get it, I'm looking for it at 93. But all in all, the momentum is very bearish. If we don't get any kind of gap fill and we break back through this node right here around 42.28, to me, that would just be looking for continuation lower. Okay, so pretty bearish this morning. Waiting to see what the market can do. Remember, when we open with a gap, that is when opportunities are available right away. This is not a opening inside the previous day's range, expect chop scenario. The market's either going to try to fill the gap or it's going to continue on the downtrend it's been in. Okay, there's an old week reference repaired. Overnight inventory was net short, so we would expect some kind of counter auction to the upside. Not getting it so far. Increasing the odds of a gap and go. Okay, we're pushing into the last potential support we got here. If this starts to break, we could get a push lower. Still no counter auction yet. Okay, they're starting to push through this support, which is bearish. So now I'm looking for, does that support become resistance? Does this 4230 area become resistance now for continuation lower? Okay, it appears it would be. That is bearish. So I will now remain bearish as long as we remain below the halfback. If we're able to get back through there, we might be trying to fill the gap once again, as we haven't gotten any counter auction to the overnight inventory yet. So I only remain bearish as long as we remain below the halfback at 42.35. But as long as we do, we're likely to head lower. Okay, looking for resistance here. All right, sorry about the quick switch. Back to neutral. I got to see them push back through 29 to get bearish once again, but they might be trying to fill the gap here. There's nothing wrong with having a bias and changing very quickly in this environment. All right, so now we can see as the overnight inventory was net short, getting back to the zero line tells us that probably anyone who wanted to take profits has had their chance. And so now it's a question of, do new sellers or new buyers pile in? If they can keep this above the zero line here, that'll be new buyers. If it does what it's doing now, which is reject off that zero line, that is a sign of bearishness. There are no new buyers. It was just the counter auction that brought that in. So we'll keep an eye on the ticks up here. Do the new buyers join the party? All right, passing back through the open increases the odds of a gap fill, or an attempt anyway to fill the gap. All right, resistance at that zero line is a sign there aren't new buyers, and that move was likely just the sellers from the overnight taking profits. So I will get bearish once again below 42.30. This volatility is no joke. I hope you guys are trading safe out there. Don't wait around to take profits. A lot of people going to have made the decision over the weekend to rebalance their portfolio, preparing for bearishness ahead. So there's going to be some back and forth here. Trading donkey. Yep, rebalancing my portfolio at open. I just mean today. Good morning, Diego and Scooball. Good to see you. Welcome. David Glass. Good morning to you. Sanju in the house. Good to see you. Cyrus is here. Philip. Good morning. T-Bay. Good to see you. Aviv. Good morning. Hustler Forever. Good to see you. Eldora. Welcome back. Dean. Good to see you. Caffeine. Good morning. Jack. Good morning to you. Design knob, beware of deer. We're back to deer, baby. 7-7 Athletics says, be aware of a short squeeze. I wouldn't think about that at all unless we got above yesterday's low. There's going to be a lot of sellers waiting to pile on up in here. Jay Trader, good morning to you. Gonzalo, good morning and welcome. What chart is he using? It's called a market profile chart. The company that I use for the software is called Window Trader. And market profile is basically the same thing as the regular candlesticks. It just displays the information in a three-dimensional way. So you can see both how much volume traded at a particular level and how much time the market spent there. All right, so now we're looking for that halfback once again to become resistance. No, sir. The chop shall continue. All right, bearish once again. That is a gap and go. That was their chance, pushing back up. So when they pushed down to here, and then they came back up again towards the open and crossed through that opening price, that was their chance to try to fill the gap. They could not. They got nothing. The second they got back to the zero line, they got smacked right down. So that is a sign of the momentum being to the downside. So breaking the overnight low at 42.1850 targets the repair of the week K period low left behind from 315 at 42.11. And then we monitor for continuation lower from there. So once again, just to zoom out to the daily and remind everybody what I mentioned earlier, pushing back into this balance area here, this was the balance that gave us the momentum to make this push higher. So pushing back into it is like saying it was wrong the last time. And so if it was wrong the last time, we probably need to, at the very least, head back down towards the lower end to test it once more. So when I see that, and then I note that this was a poor low that we created on the 15th, increases the odds, not necessarily today, but that in the future we're going to head down and repair that. A lot of support between here and there, but just something to note. Combination of a look above and fail and a poor low at the balance area low is of interest. Arthur, good morning to you. Pablo, welcome. David V, good morning to you. Rocket says, yeah, made my bag up on the NQ. Be careful. Took some serious draw for a few there. Size down, baby. Yep. Trade safe. Whenever the market is moving this quickly, you want to just position make your position size a little bit smaller, and you don't want to wait around to take profits. Because it can reverse on you very fast. MW, ahoy to you. Bob Smith, good morning. Scott, I just went 25x leverage on Doge. Okay. Is something happening? No, bro, don't do it. Oh, man. When the overall market is bearish, it's not great to jump into the one crypto that's going up. That's how they take your money. Well, somebody's stepping in with a big market buy there. Jose, good morning to you. Lamus, good to see you. Yes, if you have not, thank you, Dean. If you have not smashed that like button yet, I sure would appreciate it. So I'm going to remain bearish as long as we stay below the open price. If we pass through that open price again, I'm back to neutral, looking for a gap fill. We can play this game all day, market. I know you're going to break sooner or later. And by break, I mean either fill the gap or head lower. I'm not going to dance here all day. So I'll be patient. That's fine with me. Danielle, good morning, Charles. We left Friday's POC 100 points above. What do I think of that? I just think there's momentum. You know, it's fear that's driving this move. So fairest price to do business doesn't matter. People aren't being smart right now. They're being emotional. It would be smart for the sellers to let it come back up to that fairest price and then sell up there, of course. But they got too much fear and panic. Can't even get to yesterday's low. Design knob. What if one contract is still too much? Then what? Do you mean for the risk with the Oh, it looks like the NQ filled their gap. So that's a little bit less bearish there. They also got above the overnight high. So I'd say NQ more neutral right now. Yeah, if one contract is too much with the volatility, step aside, man. There's nothing that says you have to be in a trade. Scott, no, it pumped with Elon Twitter. What did he say? I love Elon Musk, but anyone who listens to his Dogecoin trade advice after he went on SNL and said it was a scam probably should recognize he's not doing it for your best interest. He's doing it for his own entertainment. Captain Tiberius, welcome back. Good to see you. Tom, what are the three lines on TradingView that you have? Those are simple moving averages. It's the 20, the 50, and the 200. Speaking of which, oh man, they are all starting to curve down. That is bearish. But yeah, 20, 50, and 200. Or sorry, 200 daily moving average. Cortman, do I use VWAP? I do not. I have no problem with VWAP. I know there's a lot of people that make money using that. It's just not something that interests me. 7 Mile Reach. Imagine having the power to move markets with a single tweet. Yeah, well, that dude can. Elon Musk can sneeze and move the market. Trump was another one. Back when Trump was president, one little tweet and the market would just go ape shit, the whole thing. Okay, the 8-period low here is considered weak because it is one tick from the overnight low. So that just slightly increases the odds that it'll need to push a bit lower. And like I said earlier, breaking that overnight low increases the odds that we're going to head to 42.11. Screwball, with that volatility, can it be weak? Yeah, it still counts as weak. Absolutely. Somebody put their orders in right there. Why? What were they looking at? Obviously, that overnight low. And if they did buy that purely because it was the overnight low, they're probably pretty disappointed right now. Likely to go ahead and get squeezed out of that long, giving the market momentum lower. Trading Donkey, I wonder how much of an effect we're going to see in these mega cap earnings from the pullout of the Russian market. For Visa, it's like 6% of revenue. Apple, it's like 3%. Interesting. Yeah, I mean, that's what happened in Netflix. Okay, so after we repair the weak reference at 42.11, we monitor for continuation lower from there. There's another weak reference just below it at 42.08. So if we repair that one, we can look for a little push back up and some resistance around that overnight low. So the weak reference is repaired, but they left behind a poor low. So this is just the push away from the poor low. We're looking for resistance and continuation back down. We do have a low volume node in need of some backfilling here, so it would make sense to get resistance up in there. TP, did Murderbot wake up early? It is moving like Murderbot. Now, just lots of people with different opinions. Some people think this is the best dip you could possibly buy, and they're so desperate to add to their portfolio at these levels. And some people think the world is coming to an end, and they're betting against each other really fast. Buying one stock, selling another. Ooh, the market is moving. Remember, the market is always just a reflection of the participants. If you wake up in the morning panicked, there's probably other people too. Okay, repairing the poor low increases the odds. We're going to head down to 42.08 to repair that weak reference. Still looking to try to backfill this low volume node and get some resistance at the overnight low. So we may need to do that first. Harry P. is trending lower more bearish than feeling bearish? It's a great question. Kind of. Trending lower is a technical term that in market profile theory, we have a very specific set of criteria that tells us that the market is heading lower. And that is what we call trending lower. As long as it fits that criteria, it just has the highest probability of going lower. Whereas when I say I'm feeling bearish, that's just my interpretation of the market generated information prior to us getting the official signal we're trending. Although I will just note that a gap and go on a spike down is the highest probability for a trend day lower. So we can't call for the trend day yet. We have to see if we get, selling beyond the initial balance, so selling after the first hour. But at the moment, it is setting itself up for a trend day lower. Trading Donkey, did you catch Peter's final weekly video? I did. And you know it was the next thought that went through my head. Nature abhors a vacuum. There's some market profile traders that are going to want weekly videos. I should think about that. No, but honestly, I'm kind of sad about it because that's been a part of my routine for years and years. Every Monday morning, I watch that, like a half an hour before market open just to get his perspective. All right, we're getting good taper here on the low, but it is weak because it stopped right at that weak low from the 15th. So we are still needing to go a couple ticks lower here and repair that. Boss man, no, he's not retiring. He's just going to switch to making like educational content as opposed to like the weekly videos. So he's going to make a lot more stuff about like option strategy and stuff like that. I actually think marketing wise, it's a good move. He's been doing those weekly videos for like 6 years or something. Really long time. So he's probably gained what audience he's going to from that. Okay, this B period low is still considered weak. So we are now looking for resistance to come back down and repair it. Still need to backfill this low volume node. Seven-mile reach, finding the micros are so much more comfortable than constantly sweating it and getting smashed with minis or with minis. Much happier adding to positions. There you go. It's another one of those questions of like different market environments, right? With this kind of volatility, you want to be trading with smaller size to help you with the emotions of the volatility and to allow you to give, much wider stops. Trade the market in front of you, as they say. Dean, once again, thank you. Smash that like button. Smash the like. Scott, I only started trading futures since February, March. Yeah, this would be a tough time to start. You'd be like, man, this trading is hard. Okay, so next resistance above is going to be the halfback at 42.2650. We got a weak reference at the low in need of repair. We got a gap and go, which is bearish. We got the value area pushing right up against the low of the day. So both the weak reference and the value area increase the odds we need a little more excess to the downside. So as long as they keep smacking those ticks down at the zero line, we assume the sellers are still in charge here. And this is just a bounce. Looking for resistance. God, I learned I only take donkey trades. I bet you that would be profitable. Be kind of boring, but it'd be profitable. Aviv, why weak reference? Well, it's from a long time ago. It's from the 15th. The J-Lo was weak because it was one tick from or was at the same level as the A period high. And then our low today is weak because it's one tick from that weak reference. Never listen when they tell you weakness below doesn't matter. It may take longer to repair, but it needs repair, which is why I'm so interested in that poor low that we left behind at the lower end of balance. Trading Donkey, there's even a donkey effect on shorter time frame candles. You can take them on 15-minute and 5 minutes. Really? Don't say that to the scalpers. They're going to love that. So once again, ticks trying to test that zero line. Do they get smacked down once more? Screwball, it's NQ fighting. It's NQ fighting what? Oh, okay, yeah. NQ, not as bearish as the ES. You got the B period is still inside the A, and you're finding support inside the overnight range. You also already filled the gap. So NQ is kind of neutral at the moment. I would get bearish if you break the low at 13,234, for continuation to the downside. But until then, chop, it would appear. Scooball, support at the opening on NQ. Look for that support to become resistance. Look to see, do you stay below the halfback? If so, those lows are in play. If not, chop, 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 chop. Greg, my clicking finger has a cramp from scalping. Hey, man, you could be digging ditches. It's not a bad way to make money. All right. Well, that happened so quick I couldn't even turn on the mic. All right. So we broke back through the halfback, which should have acted as resistance for continuation lower. And we got the ticks successfully above the zero line. So now that gap fill is back in play. I certainly wouldn't be looking to enter a trade unless we got above the opening price here on the ES. But that is new buyers trying to push the market higher. So let's give them a shot, see what they got. The NQ is pushing into that 20 moving average from the 15-minute candles. It's been acting as very strong resistance. So let's see if that holds here or if the market is able to push through. Screwball ES losing momentum. Not yet. I mean, wait till it gets above the opening price and tries to fill the gap. But for now, it's the momentum is still to the downside. You still got spike down, gap and go, value lower, poor low, weak low in need of repair, So the probabilities still stack up to the momentum being to the downside. John, this gives me a horror flashback to last Monday, up 30 points, down 30 points, up, down. Yep. We live in volatile times. This market likes to move. But the good news is we can adjust our strategy. Like I said, smaller size, take profits quicker. Don't wait around for a trade. Get in, have a nice loose stop when you get in, but once it's in your favor, move the stop to below break even so you can't lose money, stuff like that. There are strategies for dealing with this volatility. You just can't let it get you emotional. You can't start to panic as it pushes lower or panic as it pushes higher. You have to stay rational. What is it doing? What are the signals that will tell me it's doing something else? All right, for the NQ, getting above the overnight range is a little bit bullish, and the initial balance being to the upside is a little bit bullish. So next potential resistance is going to be 13,450s. Right up in here. They also successfully pushed through that 20 moving average. So that's a little bit bullish, a little tiny bit. RK, emotions depend on your current losses or gains or margin calls. I disagree. You can be flat and the market can cause you to have emotions. Those things amplify your emotions, though. All right, buyers are defending here. They're staying above that zero line. If we can get through the opening price, I will be bullish for gap fill. Not really beyond that, looking for resistance at Friday's low. All right, we pulled the value area back up here, so it's no longer at the lows of the day. So I am bullish for a gap fill, but like I said, not beyond that. I could easily see this as the bigger players just giving themselves a bounce to sell into. So let's see if we're able to get up to yesterday's low at 42.6250. Looking for resistance there. Oh, Scott Anchorman reference. Boy, that's an oldie but goodie. I feel like the bastard killed Baxter. I feel like I'm in a glass cage of emotion. The bad man kicked Baxter. All right, there's the repair of the poor high. We are now one time framing higher. As I've said, I'm not super bullish. I'm just looking for a gap fill. If they can't get it, I'll be bearish again very quickly. But we know that they love a gap fill. Seven Mile, are you able to explain one time framing, please? Sure. So essentially, we look at the first hour of the day as an initial balance. So you can see this little green line on my software that shows us, where the market traded in the initial balance. Whichever direction you break that initial balance, you often get some continuation in that direction. So it can lead to the market, going higher and higher each time period. So as soon as we break it, we consider that the beginning of one time framing. And that basically just means we believe the market is going to go higher from that point. And we know that that's over if one of the 30-minute time periods get the low of it gets below the previous 30 minutes. So obviously it's not going to happen here in the C period because of the fact that the B period low is all the way down here. But let's say we push higher in the C period, like up to here, and then we print the D, and it goes up a little bit, and it comes down. As long as it stays above the C, we assume it's going to keep going higher. And if we print the E and the F and so on and so forth, and as long as we continue to make higher lows, the assumption is that the market will continue to head higher. But this, as I've said, to me this day, I wouldn't trust it until we get into yesterday's range. All right, and with that, I'm going to bid you all farewell, au revoir, wish you happy trading on this very volatile Monday morning. If you are not a member of the brigade, there is a link in the description. You can join. It's just $10 a month, and you get to hang out all day, every day. So if that's something that interests you, I highly recommend you join. And if you're already a member, I'll see you there in 2 minutes. Thanks, guys. Have a great rest of your day.